I'm Darren with Arbitrage Trade, and this is After the Bell, and this is actually episode 2. We were not canceled. They didn't take us off air. They allowed us to go one more time at least. Thanks for joining us today. My guests today are Daniel Hopwood, who is the ex-institutional wealth manager that we all, I was going to say know and love, but you know. And then we have then we have our founder and CEO, inventor of PIPS, Royce Wells. And I, of course, am the resident retail investor who evidently lives in the basement of his parents' home. God bless their soul. And as you can see, it looks like I'm in a basement. Thanks, Daniel, for that comment. And bless you, by the way.
Thank you.
Thanks for taking the microphone off when that happened. I didn't hear it. That's good. You mimed it for us. All right, our first segment is Tail of the Tape. And we're going to talk about ETFs. And we're going to let Daniel start so he can kind of give us the general, what an ETF is, first of all, for those that may not know, and how they're created, and then we'll go from there.
Yeah, so an ETF stands for Exchange Traded Fund. And essentially what it does is it holds a basket of stocks that is simply managed by a company like Fidelity or BlackRock. So, the most famous one being SPY. It holds all 500 stocks in the S&P 500 so that you don't have to own each individual one and then trade in and out of them as their weight in the index changes. And these were made famous and introduced to the market by Vanguard. And because, mutual funds over time have not outperformed the S&P, even though you pay a high fee for them. And so ETFs are the alternative to traditionally just track the market with a lower fee. But over time, they've taken on a new life of their own, and they continue to this day.
Okay, so yeah, so evidently, are they safer to invest in? Because you always hear, like in volatile markets, then let's go to ETFs. They're safer. You won't. The risk is not there. Is that true?
To some degree, there are ETFs that track the Magnificent Seven. So if those are up a lot, then obviously they do great. But with high beta stocks, when things go south, they go south much quicker. Just owning the S&P and maybe a traditional bond ETF is considered traditionally safe. But then there are also the Cathie Wood ARK ETFs that, once upon a time did really well and have since traded extremely poorly. So, those were very risky. But people have been buying more ETFs than mutual funds because, like I said, they at least keep pace with the market instead of underperform. And in the last 3 years, there's been more than $1 trillion of outflows from mutual funds into ETFs.
Yeah, they just typically outperform the market. But what about ETNs?
I know nothing.
I don't compute. What is an
ETN? Enlighten me.
So an ETN is sort of like a decaying device. So just like an ETF, it's traded, but it always decays. Theta is always an option in it. So no matter what you do, the longer you hold it, it's not a buy and hold recipe. So the longer you hold it, the less it is worth. So an ETN is dangerous. An ETF is definitely where you would want to buy and hold.
Is that like the I can't remember the name of the stock. Is it USO that holds rolled oil futures that essentially if you hold it, you never actually make any money?
Pretty much, yeah. You got the S, I think it's X, what is it? UXVY and SXVY are, I think, ETNs that are basically out there, and basically they track against the S&P 500. And typically they just decay. If you look at their chart and their history, it's just down and to the left. Or I guess you're down to the right because you can't go to the left.
You revisionist, you.
But if you keep going back, you can see up and to the left.
I was just going to say the only ETNs I knew play football in the NFL, but I digress. I know you guys aren't football fans, but I am. So
what's football?
So, some of our listeners might get a joke there. You got anything else there, Daniel? I mean, I can't. I got to say that, of course, BlackRock is number one, and State Street and Vanguard are after them, but BlackRock is responsible for about 33% of the ETFs that are out there. So take that for
Yeah,
you want.
ETFs, I think they say make up 50% of the market now. So it's just passive investing, which a lot of people argue is bad because there's no price discovery. But it's maybe it's bad for the institutional investor who's trying to play those swings and make money, but it's good for the average retail investor because they get to keep the performance of the market without paying a heavy fee of a manager while having relatively low risk, all things considered. And they've become so popular. This article is talking that PIMCO saw a record $4 billion of inflows into their ETFs versus only $2 billion into their mutual funds. So the people that aren't aware are becoming fewer, where more people are becoming aware that ETFs are kind of the move, and they're seeing the inflow in those products. And I think we've seen a big one with the Bitcoin ETF getting it's the fastest growing ETF that BlackRock's ever had, was like $10 billion in under a month or something.
Insane numbers. Absolutely insane.
Yeah, especially from someone who was putting down Bitcoin not too long ago, Mr. Larry Fink. But I won't call
he's not as
anybody
bad as Jamie Dimon, who still denounces it, even though they
I
have
bet
a
he's got a
product.
big inflow from it, though.
Hey, talk bad about it in the corner of the room, but meanwhile, tell your broker
Yes.
as much as you can carry. Right?
Watch what I do, not what I say.
Right? Yeah, we're not going to mention Kramer.
Oh.
Did you guys see the
just
picture
did.
on Twitter with him and the NVIDIA CEO? And it's like them together on like Kramer's Twitter account, and then someone commented just no, because now that everyone thinks it's going to go to zero.
I love
the touch
that.
of death. He embraces that, the touch of death. He just won't admit it.
The inverse
Us
Kramer
apes,
ETF.
us apes
That's
think
another
no, he's
great
got to
one.
be paid. Oh yeah. We think.
And remember, it's an auction. It's always an auction. In order to get out at the price that you want to get out at, you have to have buyers. So you have to influence people to buy if you want to get out with your profit.
Yeah, because the funds get tired of trading back and forth with each other. They got to have others outside.
Oh yeah, fresh meat.
Yeah, it's always the meat. All right.
Oh yes, there will be blood.
All right. Well, we were going to move along to foreign exchange, and I believe Royce is going to take this one and run with it, because we're going to talk about, now we're going to do bringing out the crayons a little bit later, but we're going to talk about just in general words, not necessarily charts right now, for you to talk about foreign exchange. What's going on? The big thing right now is the yen and yuan, right? So
yes.
Just kind of give us an overview of what's going on there in the competition or not between China and Japan.
Yes. So there have been very big moves on the yuan. That's the Chinese currency, right? And so much that the weekly charts have actually pushed it into a brand new buy trend. That means on a longer term scale, China is looking like it's going up, right? And with that happening, that means that how other countries interact with China as its currency becomes more valuable may definitely impact our inflation and how things are going to be spent and GDP across the globe, right? China controls about 5% of America's debt, and in that, it's kind of scary because they can influence and make our dollar do almost anything that they want with as much money that they control with it. So, like seeing the Evergrande and the other major real estate markets fail in China, I'm like, is this intentional or is this? It's like, hey, too good or too big to fail? Maybe not. Then you bring Japan into the picture, and Japan has been suffering literally for, let's say, last 5 or 6 years, right? Everything versus just the British pound, for example, has gone from 135 all the way to 191 versus the yen. The yen has not, basically, Japan has not raised its interest rate up until last week for the first time in 17 years. and it doesn't look like there's any relief coming. Also, I heard that Japan also had an emergency meeting because basically the dollar was still outpacing it, which basically makes it worth even less. So there's gonna be blood in the streets, but I want to see if Japan can stabilize, and they will have to start raising interest rates just to maintain value.
Right. It's at the lowest level in 34 years as far as against the dollar. So yeah, that caused the emergency. They called it like within 15 minutes of starting it. So crazy. Well, I guess we'll see what happens tomorrow with that. Um,
Yeah,
but
hopefully good things.
yeah, it helped the dollar though.
Oh, I am not complaining about that at all.
Not at
I
all.
want to. Go to the USA.
Yes. You're so patriotic.
I know, right?
But Daniel, anything to throw in there on that before we move on?
No,
Okay.
sir.
Besides just making the point that we specialize in the foreign exchange market here at arbitragetrade.com. So if you want to find out more about it, log on to our site at arbitragetrade.com. I sound like I'm doing the podcast now. All right, let's go to the next one, which is just a general stock exchange. I could rename this section right now as the meme exchange. And of course, as a fellow ape in the basement, I might have a few emotions off of this. But Daniel, you wanted to talk about the Reddit IPO, and I had a couple others I wanted to throw in.
Yeah, so Reddit IPO'd, middle end of last week, and they just absolutely skyrocketed 50% on the first day. And then by the third day, they had options available to trade on it, and then it skyrocketed even further. And, I can't say I really had an opinion on which way it was going to go, but at the level it's gone up in the beginning is just honestly so impressive for a company that hasn't been profitable in the 20 years they've existed. They gave 8% of their float to moderators, which I just think is absurd, right? Because these people aren't accredited investors remotely. Who knows? You don't really know who these people are. That's kind of the whole point of Reddit. And almost 10% of your outstanding float is kind of ridiculous. And the fact that when people were buying into the IPO price, it was all bought in at the top of the range. So it's actually pretty impressive how bullish this is for an unprofitable company, given where interest rates are and kind of tech stands. I did not, I didn't think it was going to go down right away, but flat or maybe kind of uninteresting would have been more of my take on it. And it's, just completely ripped.
That's exactly what I thought. I just figured it'd be just a money-making thing. Yeah. Yes. The options is what did it. And then, of course, today, I think it got, it was 10% down, 15. It definitely came down today off of its little high horse. So,
you can only play probability so far.
Yeah, exactly. And of course, Mr. DJT, Donald J. Trump, his DWAC, DWAC, and DJT merged, and right before it became part of DJT, it went up 60%, and then it went up another 14%, and then another 16%. So it's going crazy. So what's it worth now? 8-9 billion or something like that.
Yeah.
You'll have to help me. I'm just a dumb ape. You'll have to help me.
So if he can sell quick enough, he'll get his 175 million for his bond.
Right.
Yes. I think he has to wait a little bit though, right? So
yeah, I'm pretty sure there's, after the merger, there's some kind of lockup that's beyond, how soon he needs to pay. But if there's a bank that'll give him a loan against a stock, a margin loan, then right? If he has $1 billion, he can get 10% on margin loan, no problem. Or I guess it'd be almost 20%. But
well, here's the deal. This is, I'm going to speak up for us retail investors. Is the financial media always wants to say something like, "Oh, that's a meme stock," and it's usually always one in which the retail investors have more of a percentage of the shares than the investment companies do. So it's like you're just going to disparage it because you don't own most of it, therefore you can't control it as much. But they have controlled it. So it's just, I hate hearing the word meme stock. I mean, they invented that term, and they're just rolling with it to try to just put down all the retail investors. Any comments from the Mr. Wealth Advisement Manager there?
No, I mean, I think they get that term because they have a similar volatility to crypto, and they're not often a stock that is in the S&P 500, so they're kind of like an easy little brother to poke fun at. But in my opinion, like, if you know the trade and you can make money, hell yeah.
Yeah.
Well, that's what's happened, of course, with Bitcoin, which they called that too. Not as much, but they did call that more of a meme stock. Now this, like I said, when the Reddit before it released, they called it a meme stock, and now they're calling the DJT a meme stock. And of course, we all know about GME, which they really disparaged. And after the earnings, maybe they had a good reason. They're down 15 or something percent today.
I mean, I think I'm more into. Have you guys heard the new meme coins? Have you heard of dog with hat?
What?
Oh my goodness!
No.
It's called Whiff, and it's got like $1 billion market cap in like, I don't know, like a month or two.
Love it.
And now there's ones it's like seal with hat.
Just because we can, right?
Yeah, literally, like before, it's funny. I was listening to a podcast and they were saying like crypto used to be like this, new coin like Solana or whatever,
Right.
like come out. They had this white paper about how it's going to change the world, and now like the meme coins are just like, yeah, it's just for gambling purposes, and everyone's like, okay, yeah,
Yeah, right. Did you guys see the SEC won a case against Coinbase today?
Yes, that's continuing. Yes, they can continue on.
Which case was it?
I'm not recalling, but I just saw a headline for it.
Yeah, they've been given the permission to continue with it. So
You mean like
I don't know anything
file a
specific,
case?
but they continue with their case. So that's, who knows why.
Yeah, the SEC wants so bad to make currency a security instead of a commodity.
Right.
Which basically they're stepping all over lines for basically the people who actually controls currency. It's like, hey, that's not your organization. That's like the CIA talking to the FBI. Like, what are you guys doing? This is not your jurisdiction. Get out of here.
Sometimes they team together, it seems like. Moving on, we have
Not I'm talking about that. Let's go.
different show, different format. All right. Yeah. So we're gonna move on to seemed like there was something else. Nah, no, there's not. Let's go. Let's go to macro factors in the market. We got China starting their own U.S. tech ban, and we saw immediate reaction to that. But of course, now it's like it never happened. But anyway, China did start their own U.S. Tech ban. What you got to say about that, Daniel?
Yeah. So the news is that China adopted some guidelines to stop the use of microprocessors like Intel and AMD in government computers and servers. And I think this is a big retaliation against us stopping the sale of NVIDIA GPUs to them for national security purposes, which really is just us making sure we have enough supply for ourselves. We saw the whole microprocessor issue during COVID when they didn't have them for cars. So I think this is just the two tech superpowers kind of butting heads. We block the Huawei different phones and cell technology in the use of our government. So I think this is just them kind of doing the same thing, and maybe even a little bit of a preemptive, like, hey, you're going to ban TikTok. We're going to, make sure that you're not getting some revenue for us now too. And, I think it's important to see, because it's, the first step, and who knows what else. But it's like, yeah, we did it to them. Of course, they're going to do it to us. But what is this the kind of red herring for? I think is what makes it interesting.
And what about Taiwan? What about Taiwan and them saying, hey, we're just going to invade, take it over, do what we're going to do? Because that would hurt us real bad.
Yeah, for sure. What is it? TSMC makes like 70% of the world's semiconductors.
Yes.
And I know I think it was Intel won one of the bids to build some facilities in the U.S., and they've also looked at making some factories in Mexico. But China is still the cheapest place, and obviously China being right next to Taiwan and Taiwan making it, it's I think there's some urgency behind the scenes to see what they can make happen. But
yes, for sure.
It's,
well, Xi is meeting with top CEOs today, I think, or tomorrow. He's meeting with them right now. So it's just funny how the timing of everything coming together. And you remember when Biden went over there to talk to them as well, and just the timing and the events that happen around visits.
Didn't Biden go over and then, or like,
that's
have
what I'm
some
saying,
summit with him, and then he was like, he's a great dictator. Like, really
and and Yellen did it too. She went over. I mean,
yeah.
I think the whole.
Well, when Yellen went over, wasn't it like she wasn't supposed to, and it was like this whole thing of like, what are you doing? Like,
that's the waters.
Clown show.
I think they're shaking hands and laughing behind backs, but who knows? I mean, it's just crazy. But anyway, we go back and forth with them, and we say how bad they are. Then we go, we'll take your money though.
Hey, money spends here too.
That's right. All right. So 10-year inverse yields. What do we got to talk about next here, Daniel, and thoughts from Royce as well. But this inversion, and it also always usually has a recession that they keep pushing further and further down the road, or they just change the definition of what a recession is. But what would you like to say about that?
Yeah, so if you look at the 10-year minus the 2-year, it's typically, or their yields, it's typically an indicator of kind of where the economy stands. And when that ratio goes negative, anytime it goes negative and then comes out of being negative and goes positive, there's a recession following that reversion back to a positive by a couple months. And something that was really interesting that was pointed out about this one is that, one, this is the longest inversion that we've ever seen since, really tracking this stuff. And then two, we're at the same rate we were 20 years ago in 2004. And we all know in 2004, that was like after the tech bubble popped, that was the very bottom. And obviously we are nowhere near a bottom currently. And so it's kind of been interesting, correlation is not always causation, but so like what is the end result of this? Like, we're not even really close to being uninverted, and we're, at new all-time highs. Our current tech valuations are at the same level they were in the peak of 2021, when things skyrocketed back up. But we have these indicators that say that maybe once we get kind of caught up, that things aren't going to be so hot. But we have every other indicator to believe that we're up and to the right.
That's the crazy thing.
Freight train.
That's the crazy thing about inflation. They make the numbers look bigger, but your money's worth less.
30%.
Well, that's why the Fed's talking about looking at employment as becoming one of their biggest things to look at now is the employment and the wage increases and everything else, because it's not keeping up with inflation. So
something I heard the other day was that when the employment numbers came out, is that if you actually dig into them, is that they're not as strong as you would think, because a lot of the employment numbers are people taking second jobs or doing some kind of contract work or Uber kind of thing. So it's like, job numbers look good, but when you actually look at it, they're horrible, because people are like double dipping everywhere they can because, they're hurting, because inflation is 30%, depending on how you look at it.
So two things there. Number one, you always look at the revisions, because it's always the next month that you hear the real numbers. And even then, I don't necessarily believe them. And then you look at, let's just talk about that. I mean, it seems like every report that comes out has a revision the next month. And so people get all excited, the stock market gets excited about a number, and then you find out the next month that it's not really what it was. So, I mean, that's so easy to play with.
We're positive for the people, and then we're negative after the fact once, we've gotten and cashed out of whatever we were going to be playing. Right?
You
pick and choose, you redefine, and then you revise. So
you gotta keep the house of cards up.
Yeah, and just think about it. It's like always sell the news. They've like literally from the dawn of time, people tell you sell the news, because if you do anything right on the news, most of the time you lose, except I guess for Reddit.
That's a lesson I've learned in my basement. I have learned That very thing is one of the biggest things. Is the don't wait to sell on the
Yeah.
news. Yes,
Always
tough
take your
lessons.
profit. So leave
Yes,
someone else holding the bag.
exactly. Oh, that's another thing we are. We're bag holders. All right, let's go a little further now. We have a special segment we didn't get to last week, but Royce is going to actually bring out his crayons, in quotes, because, oh, by the way, all of us apes love crayons. If you know about us apes, you know that's something that we eat. I'm not going to explain that here. It's just something that is. So Royce is bringing up, and I think we all see it now, a chart. What is this a chart of? I see a
This
J at
is
the
a
beginning.
chart of arbitrage trade on TradingView. What you're looking at is our dashboard for all of our bands that we use to predict our trends. And you're looking at Atlas, and this is JXY. So this is the index for the yen, right? How we use this is basically the red and green recycles that you see are basically when the weekly time frame says it's going to go into a buy or into a sell. The large orange and green triangles are when the daily do the same, and then the X's are when the 4-hour time frame do the same. So a buy begins here, a sell begins there, so we can literally watch each time frame come into its own, and then watch the trend slowly change back. And it's just a give and take, sort of like a sine wave. The bad thing is, so let's go on to the 4-hour chart real quick and see what we see on here. So there's good and there's bad. If you've never used our system before, basically you don't want to see our RSI line. So this is JXY, and this is looking at literally 2021, and this is where the yen roughly at about 7 a.m. on the 12th of March in 2021 went into a brand new sell trend. And so since 2021 all the way to where we are now, it is still there. The good news is anytime we see this aqua or teal line get to the very top, that means it's going to come down. And if we see it at the bottom, that means Japan should be taking measures quickly to basically get our candles back above that blue line, and support should be right around 73.50. That's a far cry from where we are, but if they do take the proper measures, that should become support somewhere in the near future. And at this scale of the arbitrage band at the 4-hour time frame, notice this is showing literally almost 3 years worth of candles on a single screen. So will the next couple years be good for Japan based on these charts? I think so. So let's take a look at inverse to that. Let's go take a look at the Chinese yen, but the China is also experiencing the same thing, where we're sitting at where we're at a lull, where it got to the very bottom, and notice how these candles, because this line was in the bottom, the candles were drawn like a magnet to it. It wasn't guaranteed to get over, and right now there's room enough for China to actually back off and actually continue down versus the dollar. But if the red line or the red standard deviation can get over that blue line, that opens it up to allow an uptrend to actually succeed. And I'll show you guys one more thing with the dollar doing the same exact thing. And this was just a few days ago, the 18th of March. We got above, and that's what that little buy signal there was letting us know that, hey, we can get back into the dollar, and it was sitting at 103.31. And so all we're doing is now basically watching the charts go up. As long as we can keep the dollar above 103.49, we win. And right here, all of the charts, all the things, and they're almost all green. There's a little bit of a pullback because we're on a little bit of probability right here. But overall, it should be clear skies for the dollar. And the yen is not very far behind. The yuan, however, is a little bit shaky. And that's all I got.
Awesome. Great first segment there, Royce.
I appreciate it.
This is a great time to say that we are not financial advisors, and this is not financial advice. This information provided surely for the educational and entertainment purposes only. Please always consult an investment professional before making any financial decisions. Okay, did I get that out of the way?
I think you did very well. Very well.
All right, awesome.
You can
I
report
didn't
to
trip
work
on it.
tomorrow.
That's right. We provide a service that will help you through all that and even do it for you. And pips, and that's what Royce is, the inventor of pips. So if you'd like to find out more about that, then definitely go to our website, arbitragetrade.com. The most important thing we can speak about, though, as we wrap up, is the bet.
Oh, that guy.
Yeah.
That guy.
As host, I could have easily just said, and we're done. And thanks for coming. And
Institutions always
that's how
win.
honest I am. That's how honest apes are. You know, I will actually do this, even though I don't want to do this. All right. So
can anyone guess where it ends? Post right now. Right now.
Yeah.
Want to know the number?
So all week,
number?
I was winning all week. I mean, easily winning all week long. So
and what's the number that we had to hit? What's the number that we had to hit to make Daniel win?
All right, Royce, you had to hit 517.97 or lower because I was given a 2.5 spread. Or I was given the 2.5 spread in the middle because I said it was going to stay. And then you picked below that. So you would have had to hit 517.97 or lower, which possibly could happen next week. I mean, we can do this again, double or nothing.
Yeah.
And then, and then I said in the middle, so that gave me a spread all the way up to 522.98, which means that if it went over that, then Daniel was the winner. And I was looking good all week long. And then there was a Hail Mary from somewhere past at the last seconds. We're ticking down.
The charts, what they say right this second.
You know what? Remember also where Daniel used to work. He's got a few friends in the business. So, you know, over $5 I could see, and pride, which is much more valuable than
I made no phone calls this week.
Okay, we're going to check your records. We're going to check your WhatsApp.
Completely indifferent these emails.
Guys, I'm down. I need help.
No. They always get in trouble on WhatsApp for illegal chats.
It was President Xi. He's the one that did it when he came over. Okay. Anyway. Daniel is 1-0, and if we decided to do we want to do this again?
By a penny. You see that?
Are you serious? It was a penny?
It's at 523 right now.
It's 520.
Oh, it just dropped 522.99.
1 penny, sir.
No, but it's what it is at close. We got to have a stopping point. So it's what.
All right, it closed at 523.17.
And you were safe. Yes.
We'll see at 7 o'clock. I'm holding out for the final number.
Till the aftermarket closes. We didn't have any details. That's true. We didn't say anything about aftermarket, but I figured the best time would certainly be.
I'll let Daniel have it.
Yes, at market close, and then again we can do this next week, and we'll just keep a running tally and see who's close. So if we're going to do it next week, we've got to use the closing number today, which for purposes I don't have it pulled up. What was it?
523.17.
No, let's do a different one this time. Let's do like Bitcoin or something.
Oh, well, I don't want to go into your expertise.
You want to go out there. All right.
I would just switch.
Those are such big numbers, though. Wow.
All right.
We'll just do it to the last dollar. How about that?
All right, give us the parameters there, Daniel. What's it at?
I'm going to cheat slightly and use my charts to pull a number.
Oh, okay. Well, I'm going to
pull
use
the chart
your
up.
Charts.
You can just pull the chart up right now on the. Oh yeah. We could use your.
All right, so right now
the 12-point analysis.
It's at 69,150. Okay, so that'll be the price.
69,150. Okay.
Yep.
Yes.
So since you're the fun guy, I'm gonna say you're gonna say it's gonna go up.
No.
Oh, bum.
I think it'll be under 62,000.
Under 62.
Yep.
That's impressive. 62 is a good support, though. 62 is very good support.
That's what I was thinking.
And my dashboard.
Because this week it put in a higher low, and it's had pretty solid support at 62. So I think it'll either bounce from there and I'll be wrong, or it'll break through it and won't be able to come back up.
All right, let's do this. Let's say
I'm going to say 72. If he's going 62, I'm going 72.
You're going up.
Oh, you think it's going up? All right, Darren, you got a healthy spread in the middle this time around.
Well, see, I was going to see if we all agreed it was going to go down, we could play with who's closest as far as how far it goes. But yeah, if you're going to force me in the middle, man.
Well, what do you think? You don't have to take the middle.
Well, I got to go. I was going to say it's going to go down to at least 65, in my opinion. So,
Okay.
However we can make that work. That gives me 65 to 68. Is that right? Yeah.
Yeah, 65 to 68. Yeah, I'm going
that makes it even.
So that's an absolute top out if it hits 72. And I think we have support somewhere near 68, right on top of 68. If we can stay above 68, we can make it 72.
Okay, so I'm saying it's going to break below and it's going to stay below between 65 and 68. Roy says it's going to go down to 62 to 65, we'll say.
No, Daniel said that.
Oh, that's right.
Yeah,
and then you said up to 72. So you would get 60. You would get 61. Daniel would get 61 to 65 then, right?
Yes.
Is that right? No, I'm missing a dollar in there. 60. Well, more than a dollar. We're trying to make the spreads even. So we'll just do it the easy way. So Royce, you're 72 down to 68. I'm 68 down to 64. And then he's 64 down to 60. That would be the even way, right?
I'll take that.
Sounds good.
Hey, I'm math too, even though I'm a dumb ape in the basement. All right, you guys. You guys got anything else? It is Friday is Good Friday.
Yes.
So I hope everyone has an awesome weekend, this Easter weekend.
Yeah.
And there is actually an important report that's going to come out when the markets are closed on Friday, and it's the PCE. So the Fed is going to have a fun time after that. So Monday could be Bloody Monday. Who knows? We'll see. Oh, that doesn't sound right. Especially considering the weekend.
And I'm coming for you, Daniel. I'm coming for you.
Yes. I got to get back to 500 and let's see, make Royce 0 and 2.
Right.
And try to smile about it. Okay.
Oh yeah, it's fun. It's
all
right.
Fun. All right, let's wrap this up. Had a good time. Hopefully you guys will be back next week and we can talk about a lot of other things besides me winning the contest.
Yeah, you won't do it. We got this. All
right. We got to create a trophy and a crown. Yes.
It'll be a tinfoil hat.
Yes. A tinfoil crown. That would be perfect. All right. See you, Daniel. See you, Royce.
All right. See you guys.
See you there. See you, Daniel.
Thanks for joining us on After the Bell.